Hi guys, in today's video, I'm going to show you evidence about why Bitcoin is going down right now. I'll also talk about some major developments happening right now that are causing a lot of fear in the market, like the MiCA regulation. I'll share what I think exchanges will do in response to this and what the effects might be on the crypto space and much more. So, make sure to stick around from the beginning until the end of this video. Welcome back to Crypto, and here we bring you cryptocurrency videos, teaching you how to make money in this market. If you're new to the channel, make sure to subscribe and leave a comment. So, what we can see, guys, is that Bitcoin is currently resting on the edge of an orange line here at 66,500. You can see that we have gone down to this point. This is the daily time frame, so in the last 4 days, I would say we went down the first time here. We had a big bounce, went down the second time, had a decent bounce, went down the third time. We didn't go up above this orange line in this case, but right now we are resting on it. So there's definitely some selling pressure for Bitcoin right now and the crypto space overall. And I'm going to talk about that later on in this video, but just know that right now we are resting on a key support level, and there is a reason why this level has been held up by the bulls 4 times in a row here. If we lose this level, guys, then I'm expecting us to come down to this point at $63,500, which will be a very strong support level in that case. So the sideways action in general continues. If we zoom out, we go to the weekly time frame. We can see right here, so we've seen essentially sideways action since February. We've been going up, we've been going down, and now we're trending down a little bit, so the sideways action continues. And I do think it is going to continue throughout the summer until eventually we start to trend upwards. Or I do think that in general, we're going to at some point go up and break through all of these levels. But there's just too much selling pressure coming into Bitcoin at this point. So yeah, that is what is happening. And for Ethereum, it's a little bit like the same, with the caveat that Ethereum has the massive events coming up later on this year, which is, of course, the Ethereum spot ETFs, so that is huge. But for traditional markets, you can see that we are in all-time high vicinity right now, so traditional markets and the markets overall are still looking pretty well. It's just crypto and Bitcoin that is going down a bit. And what is the reason for us going down? Well, before I talk about that, let me just show you a couple of more bullish charts. So this first one is the squeezing of the logarithmic Bollinger Bands, and we have not seen this kind of squeeze for the logarithmic Bollinger Band since 2012 when Bitcoin was at $5. So essentially, the squeezing, the sideways action, the low volatility you've seen recently, it is not something we've seen essentially in the history of Bitcoin, at least since 2012. So this typically leads into a massive move. So you can see that the last time we saw this, we did see that move towards the upside. But be prepared for volatility, whether it be the up or to the downside. But yeah, the logarithmic Bollinger Bands are squeezing really, really tightly here. He is taking trade here. And just let me remind you that if we come down to this orange box at $63,500, I'm going to enter into a trade here. I do think that this will be a nice buying opportunity, and I do think that the bulls are going to step in from here, and that you're going to see a massive bounce. So that is a trade I'm going to take. I'm not saying that we're necessarily going to reach this point, but if we do, and that's a big if, but if we reach this level, I am taking a trade. Now, let me continue. And this was posted by Bob Lucas, and he has taken the previous fractal from 2023 here and applied it to where we are now. So you can see that we went up. We had sideways action towards the downside and then another sideways action after a big pump. We had another sideways action and then the massive pump came here. Now, if we take the same, you can see that we have had the first part already. If you can just copy this entire thing here, you can just copy it and put it on top of where we are at right now. It could suggest that we've already had that big pump to this point, consolidating down. Second pump, potentially some more consolidation and going down. And then we could have those massive pumps. So this is also suggesting some sideways action for Bitcoin. So just wanted to point these two charts out, which are in general looking bullish. Although, yeah, this one is expecting more sideways action before we see that big pump. So it's in line with what I'm expecting also. Now, the reason for us going down right now is because of the selling pressure from the miners, and today I have more charts suggesting the same thing. So what you got here is the harsh rate 18-month upward trend, and it has been broken. And you can see that this is suggesting that miners are capitulating. And why are they capitulating? Well, because right now it actually costs on average $77,000 to mine a single Bitcoin. This is because of the halving. It is because of high electricity costs. It's a couple of different factors, but just know that miners are operating at a massive loss right now. And that is why they are selling their Bitcoin. They're selling everything they have just in order to survive. And what does this mean? Well, you can also see that they are selling it to OTC desks. So OTC desks are people or institutions that is able to actually buy large amounts of Bitcoin. And you can see that the inflows to the OTC desks are spiking. It is spiking really, really high. And this is due to the miners selling off their Bitcoin, like I said. So some people say that, well, it doesn't matter if miners are selling to OTC desks because it doesn't hurt, they're not dumping it into the open market. But I would say it still matters. It actually still matters a lot. Why? Because even if you're selling to OTC desks, what do you think that OTC desks are going to do? They're going to either sell it slowly into the market, which adds selling pressure. Okay, so it doesn't add it immediately, but it adds it over more time, and it's in a more controlled manner. So that is one of the things they could do. The second thing is that they already have a buyer lined up. So let's say the miners sell 2,000 Bitcoin to these OTC desks. And let's say the OTC desks have BlackRock knocking on the door saying, hey, we want to buy 2,000 Bitcoin. Okay, the miners sell it to the OTC desk. The OTC desk sells it to BlackRock in this case. Well, let's say that the OTC desks were not able to get a hold of those 2,000 Bitcoin from the miners. Well, then BlackRock would have to go into the open market and buy it straight up. So, okay, it doesn't add selling pressure in the same way, but also it kind of takes away the buying pressure that BlackRock would either put or would otherwise put into the open market. So this is why even these OTC desks, they still affect the markets. But there's going to come a point when the miners are done selling. It's going to come to a point where only the strong miners will survive. And you know that this harsh ribbon signal is in general a very bullish signal because when miners are capitulating and dumping everything they have, it usually is a bottoming signal for Bitcoin. So let's keep our eyes on that. Let's be prepared for volatility, but just also know that I think that Bitcoin is still in a healthy state, and I do think that Bitcoin is going to trend upwards over time. News. Bitcoin has recently experienced significant market activity and volatility. Whales, including the German government, have been selling large amounts, with Germany depositing 1,700 BTC to exchanges and selling 3,000 BTC, amidst $43 billion in total holdings. Binance converted 16,276 BTC from its SAFU fund into USDC to avoid price fluctuations. Despite the sell-offs, investors like MicroStrategy are accumulating Bitcoin, reflecting mixed market sentiment. MicroStrategy bought 11,931 BTC, believing in its long-term potential. Overall, Bitcoin's price has dipped below $65,000, with ongoing concerns about further declines or buying opportunities. That's a wrap for today. If you found this analysis helpful, let us know in the comments. Don't forget to subscribe for more crypto content. See you in the next video. Until then, keep watching our channel and keep educating yourself about crypto. Take care.